right? So what are we going to, achieve out of the business environment? We'll be able to describe the Emirati legal and court system. We'll be able to identify different types of companies and licenses defined under Emirati law. We'll be able to explain a little bit about anti-money laundering and anti-bribery legislation. And we'll be able to define the function and purpose of the Federal Tax Authority. So FTA, you guys know, right? Federal Tax Authority.
Yes.
Great. So a quick overview. UAE is in the eastern part of the Arabian Peninsula. It connects with the Gulf of Oman. The population is around 10 million, reported in 2021. So it is a member of multiple organizations. Amongst them, I think we as tax professionals must remember OECD as well, which recently UAE has become. Some of you might not. Let me ask you a question. Who knows about how many countries are there in the Gulf Cooperation Council, GCC? Can somebody answer that?
Six?
6 countries? Okay.
I think six.
Yes.
Not exactly informed.
6 countries. Can you take the names of those 6 countries?
UAE,
Okay.
Saudi Arabia, Qatar, Oman,
Uh-huh.
Bahrain, I
Okay.
think,
And,
and
and Kuwait.
Kuwait. Okay.
Yeah. So, anyways, it's just an overview of UAE. We'll continue. So now we come to the government and legal system. So naturally, we should first of all, it may be important from VAT perspective, especially to remember the Emirate names for this is for especially for those who joined the course and who are not based out of UAE. There are 7 Emirates: Abu Dhabi, Dubai, Sharjah, Ajman, Umm Al Quwain, Fujairah, and Ras Al Khaimah. Why do we need these? Why need to consider or remember the names of these emirates? Because you will find that when you are filing VAT return, there is the emirate. There is a consideration of emirate-wise reporting. So the Constitution prescribes the office of the federal president and federal vice president as the federal as well as the federal cabinet. So guys, think of it as this: the top level, the top authority naturally is the president. So immediately after president and the vice president, then we have a cabinet of ministers. That's the top. So any decree is issued by the president. But the question is, what about emirate level rulers? Because each emirate in UAE has a ruler. So they also issue decrees, but those decrees are called Amiri decrees. So these are two. One is the federal level decree, then there is the emirate level decree. That is also there. So if you guys are making notes, I think you should do that, because you will find that quite some of the, for example, free zones were set up under an Amiri decree, which was an emirate level thing. There will be other information also. For example, petroleum related taxation, oil and gas exploration. They are taxed not at federal level, but at emirate level. So basically, federal cabinet leadership exhibited at the time of independence of the two wealthiest emirates, which were naturally Abu Dhabi and Dubai. So they are the biggest emirates here. Constitution establishes 3 further federal bodies, which is Federal Supreme Council, Federal National Council, and Federal Judiciary. So here's a quick overview of the 3 councils. First one being Federal Supreme Council. The highest political and legislative authority of the 5 authorities established in the Constitution in the Federal Supreme is the Federal Supreme Council, which consists of 7 absolute rulers. Absolute rulers meaning each of the emirates, 7 emirates, has a ruler. So those 7 rulers are part of the Supreme Council. The Federal Supreme Council controls all federal and foreign policy, needing only a simple majority vote to pass a resolution, and also approves the national budget and high-level political appointments. That was about the Federal Supreme Council. Then we have the Federal National Council. So what is that? What is this? um, is the unicameral parliament of the Emirati people, consisting of 40 members. Half of the members are appointed by the rulers, with the second half being elected. So, with seats being distributed under an electoral college system, it is largely advisory to the Federal Supreme Council, drafting some regulations and debating policies such as the budget. The first election on, this Federal National Council's first election was in 2006, and the members have a 4-year term. This is a kind of an overview. Then we come to something which you require a bit more understanding of, which is the federal judiciary. Why? Because tax adjudication is already in place for VAT, and now for corporate tax, maybe it will be coming very soon. Judiciary is an independent legal system, and in UAE, both Sharia law as well as other sources of law are covered. You should know that there have been questions in past in exam about the sources. You're going to see as we move forward, you will find the question on the sources of law. Individual emirates are granted much autonomy, with the larger emirates having their own executive councils. Uh, each emirate in the UAE is allowed to either establish its own judiciary or to merge with the federal court system. So Emirate also has judiciary. Federal court system is also there. UAE federal court includes courts of first instance, which is the trial court, courts of appeal, and the courts of cessation, Supreme Court. So 3-tier system. The state or the Emirate federal, judicial system has also trial, appeal, and cessation courts. Now we were talking about the state level. The Emirates of Dubai, Abu Dhabi, and Ras Al Khaimah each have their own court cessation as well. So that's very interesting angle that cessation means the last stage of the court system. So first, we are going to quickly have an overview of the Sharia law here in Emirates. The Emirati legal system is influenced by Islamic, French, Roman, and Egyptian laws. Remember this line, it was actually examined in one of the papers, one of the modules. So Islamic, French, Roman, and Egyptian law. Sharia is a body of religious law forming part of the Islamic tradition. It is naturally, we already know that. It is derived from religious precepts of Islam and based on the on the sacred scriptures. So Arabic is the in Arabic, the term Sharia refers to God. We know that the holy book is there. Then there is the sayings of the prophet, and then there is jurisprudence, which has been mentioned here as fiqh. Fiqh is, in other words, it's another doctrine of law where some research has been done. So these are the pillars of the Sharia system. So basically, the book, the sayings of the Prophet, and the fiqh. So 5 Islamic principles for business. That is a key question. Sell lawful items. We call it like haram versus halal. So there are certain things which are haram or forbidden. So lawful items, that's the first rule under the Sharia, principles of business. Then honesty. Islam has very strong guidance on being honest. Good treatment of staff, no deception or fraud, and charity. So some of you who have already done, for example, takaful related audits or advisory services, you would know that there's an element of charity involved in takaful as well, in the core business model of the takaful, business. So now what we are going to look at are traditional theory of Islamic jurisprudence recognizes 4 sources of Sharia, which is naturally Quran, Hadith, uh, ijma, and qiyas. Now, maybe it is a bit new or maybe difficult for some of our friends here, but don't worry about it. If you find difficulties, share, talk to me. Hopefully, I should be able to clarify if there is anything. So, Quran is the holy book of Islam. It is considered as the most sacred source of the law. It is like there are 114 chapters. The classical jurists held its textual integrity to be beyond doubt. So, whatever is written, you will find around the world the exact same wordings there. So that is one of the sources of the Sharia law. Secondly, then we have hadith. So basically the word hadith is an Arabic word, indicating or alluding towards something that has been said. The body of hadith provides more detailed and practical guidance. So why do we call it hadith? Because it is the sayings of the Holy Prophet, Hazrat Muhammad Sallallahu Alaihi Wasallam. So it was subject to early debate whether all of the passages were authentic. So at least, so I think quite a few of us may have heard about the word hadith. This was the second source of Sharia law. Then we have something called ijma. So probably the easier translation, it is an Arabic word, ijma, easier translation would be consensus. Ijma is the consensus that could be in principle evaluate a ruling based on the probable evidence or absolute certainty. So how ijma works is probably very big level scholars in past around 1,000 years ago, they concluded on many issues, debatable issues, and there was a consensus achieved. That is called ijma. Even today, if there is something new, some new topic comes in, the scholars may develop or attain a consensus. If a majority agrees that this is the right thing, that will be accepted as ijma. Now, qiyas. Chaos is an analogical reasoning. So that's something that an issue is there. It is argumented. It is deliberated upon. Used to derive a ruling for a situation not addressed in the scripture. So something that was not addressed already in the scriptures or Quran or Hadith. So I've just taken the membership of the subscription of Zoom just today, so probably it will activate. So that is why in a few minutes time, probably this link will close. So I will share the new link for today, but in the next sessions, inshallah, we will be we'll have a long session, not a problem. So I will share the new link very quickly, or maybe we can join the same link again. So what I was saying was about qiyas. Qiyas is the analogical reasoning that is used to derive a ruling for the situation not addressed before. So that is qiyas. In classic example, the Quranic prohibition of drinking wine is extended to all intoxicating substances. So anything that is intoxicating, it is prohibited in Islam. But so many of the today's drugs were not there at that time. So that is one example of qiyas. Okay. Sharia law influences most of the civil and criminal codes in federal and local courts. So Sharia law does influence, even if not per se or in an express manner, but it does influence. But it is not the basis for courts rulings. So we should know that naturally there is a code. The legal code is here, and rulings are based. But yes, there is an influence. Instead, it is one of the many references that are used to build such codes. In some of the Emirates, especially Abu Dhabi, Sharia law has been applied to all types of civil and commercial disputes, commercial criminal offenses, and matters of personal status. So Abu Dhabi, being the federal capital of UAE, it has extensively used Sharia law. Now let us talk about the legislative process. So, according to the UAE's constitution, federal laws are enacted to cover the central aspects of the federation, such as foreign affairs, nationality, related matters, immigration, usually we call it, right, or naturalization, that's what we call it, right? Federal judicial system, federal finance, loans and currency, the banking and other monetary matters, postal and communication services, federal public works, electricity. So all of these are the types of laws that cover even education, civil defense, etc. Federal laws are intended to regulate labor and social services, real estate and expropriation in the public interest. So even if there is an expropriation of real estate or other things, agriculture, animal wealth, anything that is our day-to-day lives, the federal laws affect those. Local governments of the 7 Emirates are authorized to regulate local matters, not confined in the federal government. So a very interesting point. And please note these words because you're going to see these words in the tax law as well. So you can use these interchangeably to refer, like local governments, federal government, like that. Okay. Um, so federal government would mean the national level, and local government would mean the emirate government, the government of the emirate. Okay. Um, is there any questions up till now? Any confusion? Anybody would like to ask anything? Okay. I will assume the silence as meaning that you have understood. Okay. So the Constitution provides for the promulgation of laws and decrees. Let's look at that. Bills or drafts, laws produced by the cabinet do not have a legal impact. Now, pay attention to this point. It was also addressed in an exam. Bills or draft laws produced by the cabinet do not have a legal impact until approved by the president and ratified by the Supreme Council. Key point, guys. Key point. Let's start this. So, submission to the Federal National Council. The cabinet prepares a bill. Now we're talking about the process of approval of law. The cabinet prepares a bill and submits it to the Federal National Council, which may pass, amend, or reject it. That's the first thing, first step. Second, submission to the Supreme Council and President. If the bill is accepted by the Federal National Council, the cabinet then submits the bill to the president. So it doesn't go to the president first. Where does it go? It goes to FNC, Federal National Council. So once it is approved there, then it is presented to the president and the federation for his approval and presentation to the Supreme Council for ratification. The president and the federation sign the bill after ratification by the Supreme Council and authorizes its promulgation. So, the president and the federation signs the bill and after ratification by the Supreme Council. So, president does not sign until all rulers of the emirate have a consensus on that, or there is a majority vote. After that, it will be signed. Amendments to the bill. If the Federal National Council rejects the bill, they can amend it. Further, if the President of the Federation of the Supreme Council finds a bill unacceptable, they can send it back to the Federal National Council for amendment, and the President may promulgate a new law after the ratification by the Supreme Council. So any bill that has even been ratified by a Federal National Council can still be rejected or sent back. So that's another because there is above Federal National Council is the President, Vice President, and then at their level there is the Federal Supreme Council. We should remember it's the Federal Supreme Council and the President, Vice President who ratify this any law, who effectuate any law. Okay, now let's talk about effective date. Laws are in force 30 days after the date of their publication in the official gazette. Usually, laws are in force 30 days after the date of their publication in the official gazette, unless another date is specified in that said law. So, some of you may have read the decree, corporate tax decree. It was in the last article. It was written. It will come into force after 15 days. So it was not 30 days. It was 15 days. These examples are already there. Then retroactive date, very interesting concept with effect from past. So retroactive or retrospective. Law does not have retrospective effect, but when necessary and in matters other than in criminal matters. So the law may provide otherwise. So guys, we have 2 minutes before this link expires. I'll see if I have to send you a new link or we can join on the same link again. But if there are questions, you can ask now. Anybody has a question?
I have question.
Yes, please.
If there is any conflict between local and federal law, then which law will be applicable?
Federal law always supersedes. See, I can tell you very easy example. I can tell you, for example, without taking the name of the free zone, I took a seminar there in that free zone, and there was that free zone was set up under an Emirate decree, and it was saying like for the next 50 years there will be no tax and this and that. Federal law came, gone. Whatever was written in that decree, it was superseded by the federal law. You got your answer?
Yes. So federal law is
So
applicable.
yes, if there is a conflict,
Okay.
federal law will prevail.
Okay.
Okay. So I'm gonna close this and we'll rejoin the call, okay? Because I've just taken this today, so I will share the link immediately after this, okay, guys? Join it right away after a couple of minutes. A very quick break, okay? So, guys, am I audible?
Yes.
Okay. So, resuming our session. Yeah, so let me just minimize this window. Right, so we were talking about decrees. Uh, In the event the law must be promulgated as a matter of urgency between the session of the Supreme Council, the President, together with the Cabinet, may promulgate the law in the form of a decree. So, there's an urgency. Just like in Pakistan, we have ordinance, right? The President can introduce an ordinance and promulgate it immediately. So it can be done.
Yes.
The decree has the force of law, provided its terms are not inconsistent with the Constitution. We should know this, okay? It is similar to an ordinance promulgated by the president. The decree laws are referred to the Supreme Council within a maximum of 1 week for approval or rejection. So the decree laws are referred to the Supreme Council within a maximum of 1 week for approval or rejection. That's decrees. Now we're coming to the courts. It's an interesting topic. I think some of you who are already here in UAE may already be aware. You guys can see the screen, right?
Yes. We can see.
Good. The Constitution provides for the establishment of a Supreme Court and the Federal Court of First Instance. Just a word of advice. Whoever is here on the call today, I would advise you guys that look up for the Constitution of UAE also, because so many people who wish to learn about the tax laws, or for that matter any other laws, they have never even referred to the constitution of the country. It is very important that you should at least, once go through the constitution. It will help you to understand certain concepts. The constitution also permits each emirate to have the power to retain its own judicial system. As a result, there are federal courts and local courts in UAE. I think there was a question recently that if there is a conflict between the law, what will prevail? Who asked this question, Mohsin?
Yes, sir.
Mohsin, do you remember one word we read that there are courts of cessation at emirate level as well?
Yes.
Right. So that means a kind of an emirate level court of cessation is there. If the court has decided that, it is quite likely that the verdict of that court of cessation at emirate level will be seen as final. But usually that the matter has to be of that and effect that does not affect at a national level. So you should understand this point. The courts in each emirate have jurisdictions in all financial matters not assigned to the UAE federal courts under the constitution. So that's where the clarity has come. There are certain aspects which the Constitution says that these will only be decided in the federal courts. So if any such matter is there, then it will always be the jurisdiction of the federal court rather than an emirate level court. The federal court system consists of Supreme Court, Court of Appeals, and Court of First Instance. So three tiers are there. There is Court of First Instance, then there is a Court of Appeal, then there is Supreme Court. Judgments delivered by the Court of Appeal are subject to an appeal to the Supreme Court based in Abu Dhabi. Naturally, the Emirate of Abu Dhabi, Dubai, and Ras Al Khaimah have independent judicial systems. So their systems are, standalone. The structure of their judicial system is similar to the federal court system. The common law courts at the Dubai International Financial Center. Now, this was the point that why I was saying this is a very interesting topic. So, for example, in Dubai, there is courts. There's common law in effect in Dubai International Financial Center. In Dubai and as well as in Abu Dhabi, there's another business hub called Abu Dhabi Global Market (ADGM). In Abu Dhabi, have a court of first instance and a court of appeal. Decisions are not judicially binding, although they are used as persuasive arguments before the court. Accordingly, judges in the UAE are under no obligation to take into consideration previous decisions of the court as precedent. So, these common law courts in DIFC or ADGM, they can issue the judgment, but if the federal court decides to digress from that decision, they have that capacity to do that. Now we are coming to a very burning topic, which is free zones and trade licenses. So in this, we are not talking really about the taxation, but for this topic will be just to get an idea or an understanding of what free zones are. So key point for us to remember, free zones are geographically demarcated areas. So there is a geographical boundary within the UAE in which 100% foreign ownership is permitted. As a matter of fact, just to let you guys know that now even in the mainland, 100% foreignship is permitted. Previously, it was only free zones, but this system changed around 4 years, if I remember correctly. 4 or 5 years ago, this system changed. Now, even in the mainland, people can own, expats can own business. Let us look at two of the biggest, most infamous, free zones called DIFC and ADGM. The DIFC and the ADGM are the UAE's two main financial free zones. They are infamous around the world. The DIFC operates within a common law framework to ensure the highest international standards of legal procedures and dispute resolution are practiced. DIFC courts act as independent administration of justice for resolving all civil and commercial laws in the DIFC. Similarly, ADGM courts, regulations and supports regulations and supporting rules enshrine ADGM's legal framework of the direct application of English common law. So, common law is in practice in these two zones. Sharia law is neither applicable inside the DIFC nor ADGM. So, quite a lot of expat community is worried about the Sharia law. So when they are coming to these two free zones, ADGM or DIFC, they don't have to worry about it because Sharia law is not enforced in these two free zones. Okay, then we have a bunch of non-financial free zones. UAE offers investors more than 40 multidisciplinary free zones. This number is subject to discussion. Actually, it is more. It is not 40, probably more. I would say 45, 48, something around that. Exact number we can find out. But there's quite a lot of other free zones as well, in which expatriates and foreign investors can establish companies which permit 100% non-Emirati citizen or company ownership. While the non-financial free zones generally apply local law and federal law, if required, under a collaboration with the DIFC courts, they can apply English language common law based on the laws and legal systems of England and Wales. So, a point to remember, which legal framework reference is there in these courts, it is the English system, common law system of England and Wales. DIFC law and courts provide a forum for commercial dispute resolution in the Middle East due to court hearings and documentation being in English and the application of the developed common law. So, see, one of the challenges expatriates face in UAE, especially in mainland, is that the documentation is all in Arabic in mainland. But that changes when you go to a free zone. Then the documentation becomes in English. That's a key point for us to remember. Now, let us talk a little bit about offshore free zones. So can somebody tell me generally, I mean, I think Akash is here, or I don't know if Haya is attending this call or not, I can't see. Anybody can tell me that what do we usually mean by offshore companies or offshore? Can somebody say this? Yeah, Mohsin, anybody? Do you know what is an offshore company? Anybody?
I think it is a foreign company.
It is a foreign company. Okay. Anybody
Yeah.
else?
Actually, offshore companies are those companies whose main office is not present in that particular state or a country, and only the back office is there, and normal operations are going on from the back office,
No, what do
which
you
are
mean?
not present in the main
Not
company in which the main, office is present,
Acha,
where they are registered,
what do you mean by normal operations?
like supporting operations or
Support.
business operations.
Okay. Let us talk about this then. I got the idea as to what you understand usually by offshore. UAE permits the formation of offshore companies in Jebel. These companies cannot trade in the UAE. Haya and the other guy who answered, please see this sentence clearly. Okay. These companies cannot trade in the UAE, but may own stock in a company. Here, the word stock means shares or other financial security. May own stock in the company which can trade in UAE. You got my point? So these are holding companies. They or a bank account managing companies. That's it. They cannot sell or trade in UAE. These offshore companies are formed in the respective free zones and are subject to the same code system, which is applicable to companies formed onshore in the free zones. And contracts entered into will be able to adopt DIFC laws to resolve disputes if required. So if some, we have a terminology called memory hook. Somebody asks you, what is an offshore company? Your answer should be, look, offshore companies are kind of special purpose vehicles, which are not onshore, which don't really have an office. They may have an office, but they usually don't have an office. And the only purpose of setting up those companies is usually to hold shares in UAE companies or other companies, and they can have bank accounts. They cannot trade. They cannot trade. Ras Al Khaimah courts and RAC governmental bodies entered into collaboration arrangements with the DIFC courts in 2016. RAC is in order to develop a relationship between the RAC and DIFC judiciaries and to simplify the enforcement of court and arbitration awards issued in the DIFC and vice versa in Ras Al Khaimah. So there is already a collaboration between the Ras Al Khaimah courts and DIFC. Parties can opt in to DIFC. So it's an optional arrangement. So parties can opt in into the DIFC law and courts under the contractual terms. So you guys can, if you want to look at DIFC, all you need to do is, let me write here difc.ae, and there you go. So you can see this is DIFC, and if you go into the various tabs that are provided, you will find the DIFC laws as well here. So you can do the search and you will find there's a very detailed DIFC law framework provided. So anyways, let me continue. Trade licenses. In order to conduct business in the UAE, a trade license is required. There are a range of trade licenses. So long list of activities is there available when selecting. Trade licenses are issued by respective emirate regulators. For example, in Dubai, we have Department of Economic Development, DED. Who knows the other name of DED? Can somebody tell me? Dubai Economy. Economy, yes.
Dubai Economy Department.
No, full name is Dubai Economic Department, but short form is Dubai Economy. You can go to the website and you'll find the name written there. Issues a trade license covering one or more of more than 2,100 business activities. DED has a vast lines of business activities available. These activities are divided into 4 categories: industrial, commercial, professional, and tourism. DD, Dubai trade license, are either commercial, industrial, or professional. Let us look at it quickly. First thing, commercial licenses. Commercial licenses grant the recipient the right to buy and sell commercially within the UAE. Commercial license activities, a lot of them: mechanical engineering, aircraft, bags, financial services, fuel. So many different activities are available in DED. Let us look at the industrial licenses. Industrial licenses confer the right to manufacture. So the difference between commercial license is they grant the recipient the right to buy and sell commercially. So trading, basically. Commercial license is for kind of trading business, but industrial license, manufacturing business. What about the third category, professional licenses? A professional license
Like service provider, professional like service provider.
Sorry?
Service
Yeah, service provider.
providers or
Correct.
professional.
Absolutely, yes, yes. At the time of writing, professional licenses activities include, but are not limited to, all of these: applied research, organizations for business and professionals like the associations, Association of Business Aviation, nursery, salons. You can, I think based on common sense, we can understand so many different types of services are issued under the service license. Foreign ownership of commercial entities. Let's talk about the expatriates who want to start off business here, or the foreign direct investment. Until 1 June 2021, foreigners were not allowed to form a wholly owned a mainland company. Yeah, it was 2021. So correct. So that's what I told you guys. Mainland companies were required to have an Emirati shareholder owning not less than 51% of the company stock, or an agent. A recent change to the company's legislation permitted the establishment of companies with 100% foreign ownership. I hope you guys are clear on this, right? So, Haya, since you are, mashallah, very experienced tax practitioner, and I think we may have Akash on the call as well. Akash, are you there?
I am here. You are asking about Akash?
Yeah, I have a question for you. So, if it is a mandatory situation that you have to take a local owner, right, 51%, what kind of a scenario it will create in the country from a beneficial owner perspective? I mean, now you want to
49% of shareholding. If I have 49% of shareholding and the other person has 51% of shareholding, decision making power would be with him, not mine.
anybody
And
anybody in UAE on this call, anybody from UAE who can tell me how did people avert this situation? It was there since ever, like for the last 20, 30 years or so, this challenge was there, right? 51% ownership on paper to be given to a local shareholder. But people averted this in a very clever manner. Can somebody tell me how?
Taking power of attorneys.
Yes. So what do we call that? It's a trust deed, actually. So what they used to do before this date of 1 June 2021, before this date, what people used to do was that, okay, I have to tick mark that local shareholder thing. So I will take a local shareholder and I will create a trust deed with him. right? That local shareholder was just a figure on the trade license or on the memorandum of association. He had to sign a trust deed with the actual beneficial owner who was actually owning 100% of the company. So all the that local shareholder's hands would be tied through the trust deed. That you cannot open a bank account, you cannot dissolve the company, you cannot close the bank account, you cannot enter into any deal except approval from us, who are the actual beneficial owners. Haya, did you understand what I just said? A trust deed
Yes,
agreement
Mr.
was there.
Altaf,
Yeah,
just a
I
doubt.
got it.
yeah.
So this trustee details would be mentioned in the MOA
No, no, no.
that the
Obviously not. That was
okay.
outside the memorandum of association. Trust deed
Okay.
arrangement is always out of the memorandum of association. On the memorandum, on the trade license, it will be clear that okay, this local shareholder is the 51% shareholder. But parallel, there was another document which was enforceable as well. That this shareholder is holding the shares on behalf of this actual ultimate beneficial owner. Now you understand this point? So this was taken away, taken out on the 1st of June. Now expat shareholders can own 100% owned companies in the mainland also. In addition to making this change, Federal Decree Law number 26 of 2020 authorized the UAE cabinet to establish a committee which includes representatives of the relevant authorities with a view to proposing activities of strategic importance. So basically, new activities, inclusion of new activities in the allowed list of activities. A committee was formed to include new activities. Upon the recommendation of the committee, the cabinet stipulated activities considered of strategic importance. Let me induct people here. Okay. Yeah, so 100% foreign ownership was allowed. Okay, let us look at so these recommendations are often referred to as the positive list and negative list. It's an exam question, guys. So please, pay attention to this point. So there was a positive list and there was a negative list. The cabinet decision provided that any eligible activity must be carried out under a legal entity in the form of a limited liability company or a private joint stock company. So LLC and PJSC. You have heard these names, I think. Some of you who are practicing in UAE, you might have LLC, everybody has heard. But PJSC, maybe some may not have heard. But this is also a private joint. This is a private joint stock company. Positive list specifies the minimum share capital requirement for each activity varies between 7.5 million dirham to 10 million dirham for agricultural activities, 82 million to 100 million for industrial activities, and 15 million to 100 million for service activities. These requirements are in line with those set in the cabinet decision. So there is a positive list and they have huge capital requirements. Then there is another thing called negative list. FDI law sets out a negative list of 13 activities ineligible for the 100% foreign ownership regime, which remains subject to the applicable limitations on foreign ownership. So basically, any person coming who's not a citizen of UAE cannot open these activities with 100% foreign ownership. Oil exploration, post, telecommunication. Why? Because defense or road or these are strategic nature activities, insurance, commercial agency. So that is why there has to be a local shareholder here in these activities. In Abu Dhabi, the Department of Economic Development identified 1,105 registered commercial and industrial activities for which non-citizens, whether natural or legal, now have the right to have 100% ownership. In Dubai, DED now permits full ownership by foreign investors. Guidelines have been published around it. So more than 1,000 commercial activities are there. Similar arrangements in other Emirates. Any questions up till now? Okay. So we'll go to the
Yes,
entire.
sir.
Yeah. Okay.
Sir, I have a question regarding this mainland and free zone. What are basically the benefits of having or registering the company in mainland and free zone? Because initially, before the anti money laundering laws, tax, and all that, there was an advantage of profit repatriation, then some customs, duty exemptions, and all that. That was the main reason people or expatriates were having registering the companies in free zones. The advantage of being in the mainland was like you can have a contracts with the government or government entities. So, so for example, if there is an expat, he have options of owning 100% ownership in free zone and mainland. So, what is the factor basically he would be looking for to register in a free zone or mainland? What will be his decisive action? What will be the factors to consider?
Right. So very good question and some very valuable points that you mentioned here, Mujaddid. The government entities related contracting still applies to begin the answer. To begin the answer, that is still applicable. Secondly, another very major benefit is the renewal of the license in mainland. It is far less cheaper than that in the free zone. When you set up a company in free zone, the licensing cost gradually increases. In mainland, it reduces. Okay. Secondly, free zones still carry a certain advantages, particularly in the VAT law as well as corporate tax law. When we go ahead in our course, tax advantages are still applicable. It's not that because of being in a free zone, there will never be any kind of tax advantage. That's not the case. Okay, there are tax advantages when we go in the later parts of our course, and when we start, studying about a little bit about designated zones, for example, from VAT perspective, we'll find about what is the benefit. When we talk about the qualifying free zone person regime in corporate tax law, we will find out what are the benefits of being a free zone person. And in certain type of activity, especially trading, distribution activity, there are then the designated zones will also come in again in the corporate tax law. So there are tax benefits, which is a significant reason. Actually, honestly speaking, the presence of free zones and designated zone is one of the primary factors of a corporate tax strategy, or let's not call it corporate tax, let's call it tax strategy, because it affects VAT as well. We are going to see more details in the next portions, Mujaddid. Is it all right for you?
Okay. No issue. Thank you so much.
Okay. So now we are looking at anti-corruption legislation. So corruption is a threat to a society and a nation's economic well-being, naturally. In order to counter the corruption, UAE has prioritized the suppression of the corrupt practices. UAE has been combating bribery and corruption since 80. So there is a penal code that UAE has issued. There are still anti-corruption regulation is not very thorough. Anti-bribery laws are still something of an area to look at. Federal legislation explicitly prohibits corruption, asset misappropriation, bribery, etc. It supports the United Nations Convention Against Corruption, UNCAC, in accordance with the Federal Decree Law number 8 of 2006. On December 21, 2010, UAE joined the Arabic Convention for the Suppression of Terrorism to combat corruption, which involves 21 Arab countries. So, I mean, there are references, but an internal law has, there has to be further development in this area. But the good point I can tell you is, unlike certain other countries, particularly South Asia, or for that matter, MENA, North Africa, etc., the level of corruption here is far, far less than any part of the world, actually. So these countries, even without having, very detailed laws on these, they are, UAE, KSA, these are very less corrupt countries. Corrupt individuals are far, far less than compared to other parts of the world. Directives and guidelines. So we have certain laws which we will refer now. Federal Law number 12 of 2014 and Federal Law number 2 of 2015. Now, whatever laws we are looking at, we will have these laws in the resources section that I will share with you guys. UAE government has formulated regulations. Sorry. UAE government has formulated regulations and laws on corruption and bribery, as well as established obligations for businesses in the Federal Law number 2 of 2015 on commercial companies. So this law references references about corruption and bribery, includes appointing an independent auditor who's referenced in the register of auditors and accountants in accordance with the Federal Law number 12 of 2014. Why are we doing this course? We are doing it for tax purposes, but if somebody wants to practice audit here, so his name or the firm's name has to be on the register of auditors, and which is maintained under the Federal Law 12 of 2014. These, if you are noting down, note these law references because sometimes they are examined. This law governs the auditing and accounting professions, requiring auditors to have more than 5 years of experience auditing public and private enterprises. Articles 234 to 239. We have less than 9 minutes left for this session to end. We will rejoin again. Article 234 to 239, which, okay, the specific provisions concerning corruption and bribery are primarily outlined in article number 234 to 239 of the UAE Penal Code. So the law reference, if you are noting it, UAE Penal Code, and the article reference 234 to 239. UAE Penal Code is also downloadable. If you look at the Google it, it'll be downloadable, but I will provide you. They explicitly prohibit bribery and impose severe penalties on those who commit this crime. Accepting bribes in by private and public sector employees is again a crime, which has been detailed in these articles that we mentioned. Article 65 of the Penal Code, businesses are accountable for the unlawful conduct of corruption, asset misappropriation, bribery, etc. So these are all references to the UAE Penal Code. So there is another law called Civil Transactions Law number 5 of 195 and the Federal Law number 2 of 2015. The employer is legally responsible for its staff members' negligent actions under Civil Transactions Law number 5 of 1985. So that is why the employers are concerned. The Federal Law number 2 of 2015, as you can see, this legal system has been in place as old as 1985. The Civil Transactions Law, initially it was Civil Transactions Law. Later on, we had a detailed company law. The Federal Law number 2 of 2005 concerning commercial companies. Now, please note this one because this is the key law here. As we have the company law in Pakistan, what is the latest name of the law, Haya, in Pakistan, of the companies law?
Companies Law 2007.
Can you repeat that?
Companies Law 2007.
Companies Law 2017. Now, what is there in India? Nobody can answer.
2030. Company Law 2030.
2013.
30.
Okay. Okay. 2030 has not come in yet, so we are in 2024 still.
13.
13, okay. The Federal Law number 2 of 2015. Anyways, so this is our company law here in UAE, okay? So there are other provisions also mentioned. Some other provisions have secondary effect of countering bribery and corruption, including the criminalization of money laundering. For example, there's a Federal Law number 4 of 2002 for...
It's 2017, not 2007, sorry. 17.
That's what I thought, 2017. Okay. Federal Law number 4 of 2002, there is a Federal Law number 7 of 2014. Again, this is for money laundering. Then we had another law in 2014, Federal Law number 9, revising certain clauses of the old law of 2002, financial crimes. Then in 2016, again, a cabinet resolution was passed, Dubai Law number 4 of 2017. And then there was a cabinet resolution in 2014. There were executive regulations as well. So quite a few sets of documents are presented. What I will do is I'll copy this and we'll share this so that for your reference purposes, we will share it. Commercial offenses. The anti-corruption legislation is premised on the Federal Penal Code, which includes the majority of criminal offenses. The anti-corruption regulations identify these are the different criminal offenses that have been addressed in the Federal Penal Code: corruption, misappropriation, financial crimes, terrorist financing, guaranteeing a corporation loan to a chief or individual. So that's a kind of a very related party thing. Exposure of classified information, breach of information, obstructing justice, judicial decisions made willfully against the facts. Now even the judges are subject to it. Intentional provision of incorrect facts by judicial officers, bias against specific party, giving incorrect information to officials for personal gain. So, quite a few of these aspects of crime have already been addressed. Federal Law number 12 of 2014 and Federal Law number 2 of 2015. The UAE government has formulated regulations and laws on corruption and bribery, as well as established obligations in the Federal Law number 2 of 2015 on commercial. So we have seen so many laws, right? But I want you guys to especially remember this Federal Law number 2 of 2015, because this is the UAE Commercial Companies Law. This is the mother law. This is one of the most important laws that we should remember, that this is the company law. This includes appointing an independent auditor who is referred to in the register of auditors. This is a repetition of something we saw earlier. So how are auditors regulated? Through the Federal Law number 12 of 2014. So 2 years were quite important. 2015, when the company's commercial law came into force. And then there is another, in 2014, this auditor related law was already in practice, in effect, on the organization of auditing profession. The law governs the auditing and accompanying profession, requiring auditors to have more than 5 years of experience auditing public and private enterprises. Again, this is being repeated. You remember 2034 to 234 to 239 articles. These articles were from Federal Penal Code, UAE Penal Code. So these articles refer to the corruption and bribery, etc. So kind of a repetition so that you can remember, it should retain in your memory when you're there appearing. Article 65, again, it is being repeated. I think this was related to companies. Businesses are accountable for the unlawful conduct or conduct of corruption, asset misappropriation, etc. So quite a lot of repetitions there. Civil Transaction Law 5 of 95, Federal Law 2015. These we already read actually, so I'm going to go through them. So I'm going to disconnect the call now and we'll join again in a minute. Okay, guys? Okay. In 1 minute or 2 minutes, I will ask you to join back. Discussing a little bit about distribution of profits and losses. So the general rule is pro rata. We were on the second paragraph. If a partner's share is limited to his work, then his share in the profits and losses must be described in company's memorandum association. If in addition to so somebody is coming only to like work. So to the extent of the work that he has done, it has to be mentioned in the memorandum of association that he'll be entitled to the extent of work that he has done. If in addition to the person's physical work, the partner contributes cash or in kind, the person has to have a share in the profit and loss account for his physical work and a second share in cash or in kind. If it is set out in the company's memorandum that a partner should not have profits, is exempted from sharing in losses, or is granted a fixed interest against the share in the company, then the memorandum is to be null and void. Very interesting. So that means if this kind of a condition is there, the whole memorandum will go void. The shareholders may agree in the contract to exempt a shareholder from sharing or in the losses if the person contributes only through effort, providing that the person's remuneration is determined by reference to the effort. So you can have an agreement, separate agreement. Distribution of profits. Fictitious profits such as book entries not representing a real gain may not be distributed to partners or to shareholders. And the board of directors or any other person who is authorized to distribute fictitious profits will be personally liable to the shareholders, partners, and creditors for any such procedure. So very interesting. It says such as book entries not representing a real gain. So fake. So if the company distributes any profit in violation of the company law and decisions, oh, okay, so there are more participants, I guess. Let me admit all. Okay. Right. So where were we? If the company disputes any profit in violation of the company law and decides and decisions issued over profit allocation, the partner or shareholder must refund the company the profits he received in violation of the company. A company's creditor may claim against each partner or shareholder a refund of the profits incorrectly distributed, even though the profit may have been distributed in good faith. So, fictitious profits must not be distributed. Summary: the partner or shareholders may not be deprived of retaining distributed real profits if the company sustains losses in subsequent years. So, retained earnings can be distributed. Let's talk a little bit about accounting records of the company. So Article 26 talks about accounting record. Each company is to establish and maintain accounting records related to transactions entered by the company, providing the records accurately at any time, demonstrate the company's financial standing, through which partners and shareholders can verify that the company's accounts have been maintained as. So entire bookkeeping end-to-end process is required. Now another examinable question. Each company must maintain its accounting records at its head office for at least how many years? 5 years. Commencing the last date in the company's fiscal year for which the accounts will or have to be prepared. So there is a statute of limitations as well. We'll see that later on. Company may maintain an electronic copy or originals of the document or papers which are kept or deposited at its head office. So the key place of managing is head office. Electronic copy must be kept in a manner established by a decision of the Ministry of Economy. Digital record keeping is allowed. Company accounts, which is Article 27. So each joint stock or limited liability company must have one auditor or more than one auditors to audit the company's account. So those people who are still not clear whether a limited company is required to audit or not, the answer is Article 27. Yes, a limited liability company must have an auditor. Tax law is different. It says 50 million dirhams, etc. But that's tax law. Company law says you have to have the accounts audited. Accounts must be audited annually. Other companies may appoint an auditor according to the provisions of the company law. Company is to prepare annual financial statements, including a budget statement and a profit and loss account. So very interestingly, even a budget statement is required by company law. Company shall apply international accounting standards and principles when preparing its interim or annual accounts. The company's profit and loss account must be clear and accurately reflected. True and fair view. That's where the auditor comes in. Each shareholder or partner in a company may upon a written request submitted to the company, obtain a copy of the latest audited accounts. Interesting. So those people who feel compromised while in a shareholding position that it's a big company, they don't want to provide me, they have a legal right to obtain audited financial statements, latest auditor's report, and copy of the group accounts, if at all at no cost to the shareholder or partner, in case of a holding company. And the company is to respond to a request to supply the accounts within 10 days from the requested date. Amazing. So you can see the power of a shareholder. Even 1% shareholder can do this. The company's manager shall prepare the company's annual budget, profit and loss account, and annual report on the company's activities and financial standing, and shall provide suggestions regarding the distribution of profits to the General Assembly within 3 months from the expiry date of the fiscal year. Article 87. Interesting. Last article I'm going to repeat. Company's manager shall prepare the company's annual budget, profit and loss account, and annual report on the company's activities and financial standing, and shall provide suggestions regarding the distribution of profits to the General Assembly within 3 months from the expiry date of the fiscal year. So profit distribution decision, maximum time 3 months after the completion of the year. Company's fiscal year, Article 28. Each company's articles of association will designate a fiscal year of 12 months. So thank God they have clearly mentioned that there is a set of articles of association as well. So it's not only memorandum association, but the procedural level detail, which is contained in the article of association, that's where the company's financial year will be defined, providing the first fiscal year may not exceed 18 months. So if anyone had any doubt that how long, maximum how long can be the first financial year, the answer is here, 18 months. So if it is going, beyond 18 months, you cannot do it in one financial statements. It has to be 2, and may not be less than 6 months. So that's a very clever way to write it. So it can maximum 18 months, minimum 6 months. The period shall be calculated commencing the company's date of registration in the commercial register with the competent local authority in charge of company's affairs in the relevant emirate. So let's say company was registered on the 1st of January, but the expenditure had already started in the month of December. What do we do with that expense that was already happening for the company? Can somebody give me an answer for that?
Pre-commencement expenditure would be
preliminary expenses.
Yes, pre-commencement expenditure or preliminary expenses, they will be there and they will be properly accounted for. And we'll see what the IFRS say, whether to capitalize those expenses or to write it off. What is the latest position of IFRS on that for pre-commencement expenditure?
no clue. I haven't gone through yet.
Okay.
Expensing of if it is just for the formation of company.
Okay.
But if it is asset related, then you have to capitalize it, or tangible or intangible.
Okay. And who's speaking right now?
Pankaj.
Pankaj. Okay. Thank you very much, Pankaj. You've been a valuable contributor today. The period shall be calculated commencing the company's date of registration. So the following fiscal years are deemed as successive periods and to consist of 12 months duration each, commencing immediately from the last date of the preceding year. A lot of people might not know about this Article 239, which is statutory reserve. So read it carefully, guys, or listen to it carefully. 10% of the company's net annual profits must be deducted each year and allocated to a statutory reserve unless the company's articles of association provide for a higher percentage. A General Assembly may suspend the deduction whenever the statutory reserve level reaches 50% of the company's paid up capital, unless the company's articles of association provides for a higher percentage. So bare minimum amount, 10%. Those companies which are in mainland, they have to comply with the Article 239. And I have seen situations where some low-ranking auditors or unaware kind of auditors, mushroom auditors, are issuing clean audit reports. Companies are not maintaining statutory reserves, and the financial statements are audited. So, be aware. The General Assembly may suspend the deduction whenever the statutory reserve level reaches 50%. That we read. The statutory reserves may not be distributed as profits to shareholders. However, the part of the reserve in excess of 50% of the company's capital may be distributed as profits to the shareholders during the year or years in which the company fails to return sufficient net profits. So the bare minimum statutory requirement is when it matches the 50, that's this statutory reserve, when it matches 50% of the paid up capital, you have tick boxed the statutory compliance requirement. You can maintain statutory reserve above that value as well, but it will be available. There's no restriction on it. But this 50% you cannot distribute. Okay. Accessing records maintained.
So I have question.
Yes.
What about the free zone LLCs, like limited liability companies, but they are registered in LLC? So do they also need the statutory reserves?
No, they don't. Why? Because we read in our previous, when we were reading the free zone companies, I'm sure you saw that module, saw that part. They are not subject to the company law. They are subject to the free zone law itself. They will be subject to this law if they're operating in mainland. I hope I answered your question.
Okay, yeah.
Okay. Corporate.
ALTAF, if companies in loss in a particular year, do they need to create this 10% reserve?
Very good question. This I have to look at the answer of, but okay, let's look at the 239 wordings. I think I can answer you from the wordings of it. And actually, we can directly go into the Article 239 to look at the wording. 10% of the company's net annual profits. What is your view by reading this, Pankaj?
It says only profits, annual profits.
There you go. That's what I was saying. That's my view as well, but we can further look into it. But as far as I am concerned, by reading these wordings, it gives me an impression that if there is a loss, then there is no profit. So this 10% reserve is part of the profit. In case of a loss, probably it should not apply. But we can look at the case laws as well. As a firm who's there on the court expertise registered with Ministry of Justice, I can look into the case laws and even revert back to you with this answer. Okay. Thank you very much for raising this question. Mark this as well, and I will come back to you on this question in perspective of actual case laws that have emerged in Dubai. Okay.
Sure. Thanks.
Okay. So corporate social responsibility. Did we accessing records maintained by registrar. Parties may request access to a copy of the company's financial statements included in the records maintained by the registrar, and a certificate from the registrar or other competent authority, including certain information included in the record. So parties can access the records maintained by the registrar. What do we mean by registrar? For example, DED, Department of Economic Development, etc. Corporate social responsibility, there's another Article 242. The company may, providing a specific decision, is provided that a specific decision is made to that effect, commencing at the beginning of the third successive year from its incorporation, and providing sufficient profits have been earned, make voluntary donations not to exceed 2% of the company's average net profits during the 2 successive fiscal years preceding the year during which the donation is to be made. So very interesting angle. First of all, a company can make donations. Let's simplify things. Company can make donations. What is the ceiling of that donation? It should not exceed 2% of the company's average net profits during the 2 successive financial years preceding the year in which that donation is to be made. So this year, donation level ceiling, if we have to decide, we're going to look at the last 2 years and we're going to find what is the average net profit. We'll multiply it with 2%, and that is the ceiling to which extent we can make a voluntary donation. The donated amount is subject to A, the voluntary contribution being made only for a community service purpose, and the donee being named in the auditor's report and in the company's budget. These are the conditions. Is this point clear? Any confusions on this particular point?
More than 2% won't be allowed as a deduction, right?
More than 2% will not be allowed, and that 2% also not of the current year's profit, but average profit of the preceding 2 years.
Yes.
So let's see. We are on the second. No, we are on the third tab, UAE company law. Let us finish this UAE company law today, and then we'll resume later on, inshallah. So auditors, there are 3 articles that define the duties of the auditors. Guys, I was just discussing with the team also. There are 14 modules. Some of them, on the average, this is the length of the modules. So if we want to finish those 14 modules remaining within our time frame of 8 Saturdays, we will need to be at least with this speed, actually faster. So we'll see what are the ways to improve the speed, and and do share your feedback with me. If you feel that we can improve the method of delivery, do share your feedback. I'd love to. Are you guys comfortable with this way of the delivery?
Altaf, I would suggest I would suggest, like, let's keep a 2-hour sessions each day. I mean, I'm fine with if you are having this on Saturday, Sunday, or any other day as well, subject to the confirmation from the other parties. But
No,
3-hour session is a overkill.
3 hours. See, Pankaj, actually, we did this. There was a poll that we did. So, majority of the people participating, they opted for Saturday, actually. So, there is a poll already. I'll share with you. My question was slightly different, not about the day or other thing. My question was that the method of delivery that I'm doing right now, is it comprehensible to all of you? Are you able to understand and you're able to grasp?
Yes.
Yes.
Okay.
Yeah.
Okay.
Yes.
Okay, great. Duties of a joint stock company auditor, Article 246. Probably we'll stop at here. How much is left for this? I guess that should be it. Okay. Not too much is left. So what in your view would be ordinarily the duties? So it will be quite, as the auditor shall audit the company, examine the budget, P&L, etc., review the company's transactions, all 9 yards that is contained in the ISAs. The same thing auditor will do. Auditor will submit a report to the General Assembly. Also send a copy of the report to the Securities and Commodities Authority and to the competent authority. As part of this report, auditor shall verify accuracy of accounting records, consistency of methods and policies, accounts and company records. So that's generally, this is what the auditor's responsibility would be. Content of the auditor's report. Again, I mean, we've done this 1,000 times, probably some of you, but we'll just for the sake of it, we'll quickly. Company status as at the end of the fiscal year, especially the balance sheet, P&L account, whether the results of operations are presented fairly, whether the company maintains, regular accounts, proper accounts, stocks, purchases. These are the things that will be evaluated. Statements included in the report of the board of directors are consistent with company's records. This is there is a standard in ISA's other report, other information contained other report, something like that. That has to be opined upon in the auditor's report. Statement of transactions involving conflict of interest and financial transactions concluded between the company and relevant parties. State within the limits of the information available whether any violation of the provision of this law or the company's articles of association that occurred. So violations with the company's framework, articles or memorandum. If there were any violations, have to be highlighted. State whether penalties have been imposed on the company. In case of accounts of any group, state the financial standing of the last day of the fiscal year. So basically a true and fair view. Liability of company's auditor. The auditor shall be liable towards the company's for control works and validity of information included in his report, and shall also be liable for compensating the damage that occurred due to the performance of his work. In case of multiple auditors, each of them shall be liable for his own error which inflicted damage. So auditor has been made a lot of, quite liable for that. So there are penalties, actually, quite a lot of penalties that are applicable here. There's an Article 361. Any person who provides false information or information which is intentionally inconsistent with the MOA and AOA and or in the prospectus for shares, debentures, etc. So as well as any person who signed the or distributed these documents despite being aware of the inconsistency shall be imprisoned for a period not less than 6 months and not more than 3 years. Examinable question, guys. Imprisonment of not less than 6 months and not more than 3 years. That's the penalty of wrongful information by the auditor. In addition to fine amounting to not less than 200 dirhams and not more than 1 million dirham, or by one of these two punishments. Overestimation of the capital paid in kind. If any person who in bad faith overestimates the capital paid in kind, like contribution of a building to a business, and it was an overvaluation, the founders or partners shall be punishable with imprisonment for a period not less than 6 months, not more than 3 years. Is this common with the previous penalty? So we should remember 6 months and 3 years, right? But money changes with a fine of not less than, my God, minimum fine of 500,000 dirham. That's huge. And not more than 3 million dirhams, or by one of these two penalties. So the common imprisonment is 6 months to 3 years, but the money value different. Distribution of profits or benefits being inconsistent. Any manager or director that distributes profit or any other person in a manner inconsistent with the provisions of the company law or the provisions of the company's memorandum on articles, as well as the auditor who approves such a distribution despite being aware of the breach, shall be imprisoned for not less than 6, not more than 3. Again, common, the duration of imprisonment, or with a fine of not less than 50,000 dirhams and not more than 500,000 dirhams. This is what profit distribution which is inconsistent with the company law or memorandum articles or any other non-compliance. Hiding the actual financial position of the company, that's a severe thing. Any manager, director, auditor, liquidator, even we do liquidations also, who intentionally provides false information in the company's budget, P&L, financial reports, or neglects to reflect material incidents in these documents in order to hide the actual financial position of the company, shall be imprisoned for a period not less than 6 months, not more than 3 years. 6 months, 3 years, common. But money fine, not less than 100,000 dirhams, not more than 500,000 dirhams, or by one of these two punishments. Have we completed this? No. Still, guys, I think because now I think people will not be able to retain. Do you want to reconvene at later time? I think today we will stop it at the auditors discussion. Foreign companies is the next topic we will start in our next session. you guys can make a note of it as well. And any questions or any other points of discussion, if you have, I'd be glad to answer.
I have a question. For the corporate social responsibility, 2% they said that they can voluntarily donate. So would that be tax deductible expense?
Now, that is a different area. What we read was purely from a company law
Company
perspective.
perspective, yeah.
When we come to the
Okay.
corporate tax decree law, at that time we are going to revisit this question, and trust me, we will. Why? Because there is under the corporate tax decree law, it has been clearly stipulated that any donations will only be allowed if the donee is listed under the list of charities which is approved in a cabinet decision. Okay.
Okay, just like in Pakistan. Okay, I got it. Get it.
Great. Perfect, guys. It was excellent having you here. It was very nice to see your participation. Great. Inshallah, hope to see you soon. Thank you very much.
Thank you.
Thank you.
Thank you so much.
Most welcome.
Thank you.
Thank you.
Going to the next part. Now we're coming to governing bodies. The Dubai Economic Security Center was formed in 2016 by the Emirate of Dubai to oversee the combat of corruption and bribery. So DESC, Dubai Economic Security Center. It recommends and advises on the regulations governing the financial affairs of Dubai. So they are giving an example by referring to the Dubai entity, but there are more as well. What kind of things does the desk do? Desk recommends and advises on the regulations governing the financial affairs in Dubai. So financial affairs, tracking violence and financial discrepancies in Dubai, preparing and releasing periodic data and information on the economic and financial state of Dubai, fighting corruption, asset misappropriation, forgery, bribe. So all of the usual crimes that we encounter or face in the course of business, money laundering, financing of terrorism, felonies. All of these are dealt with by desk. Desk has the authority to halt stock market trading, revoke, stop, or restart any financial sector regulatory requirements. Who amongst us know how many stock exchanges are here in UAE? Can somebody answer this question?
2?
Are you sure? Okay, tell me the names.
No, one. Sorry, Dubai. Sorry, Abu Dhabi stock market.
Okay, anybody else?
To Dubai stock market and Abu Dhabi stock market.
What about NASDAQ? So actually, yeah, the mainstream tier 1 stock exchanges are two, which is DFM, Dubai Financial Market, and ADX, which is Abu Dhabi Stock Exchange. But there is a second tier alternative stock market as well called NASDAQ Dubai. Okay. So anyways, so desk has the authority to halt stock market trading, revoke, stop, or restart any financial sector regulatory requirements, and acquire bank information for any natural or juridical individual. During the investigative process, it may request that the public prosecutor confiscate funds, records, and any other items. So it is quite authoritative. I think the tax officers or the collectors in Pakistan, India have the similar authorities as well, right? Several government entities are responsible for regulating anti-bribery and corruption regulations in Abu Dhabi. So in Abu Dhabi, what do we have? Abu Dhabi Accountability Authority, the anti-corruption unit formed in 2015. State Audit Institution, SAI, which audits public sector organizations. The UAE Central Bank's anti-money laundering and suspicious cases unit. Then we also have United Emirates Police Forces, naturally, with jurisdiction limited to each emirate. Dubai Financial Services Authority of the Dubai International Financial Center, the only free zone with its own authority. DFSA is a very well-known authority. But there is FS. There is another Abu Dhabi also. FSRA, I think, Financial Services Regulatory Authority in Abu Dhabi also is there, I think. Okay. How many of you are already working in anti-money laundering and countering the financing of terrorism? Has anybody worked on it? Okay.
No.
Okay. So this is a burning topic of today's world, anti-money laundering, as well as countering the financing of terrorism. So as at March 2022, UAE was on the Financial Actions Task Force grey list of countries, which have been identified as having a strategic anti-money laundering deficiencies, even though much progress had been made. But in March 2022, FATF wrote that in February 22, UAE made a high-level political commitment to work with FATF and the Middle East and North Africa, MENA FATF, to strengthen the effectiveness of the anti-money laundering and combating of financing of terrorism regime. So since the adoption of this, so let me explain to you. There is something called mutual evaluation report that Financial Actions Task Force, which is the biggest entity of the world, organization of the world, FATF, issues. So what happens is one or two member countries come and visit UAE, and then they start looking at the banking system, the exchange houses, insurance companies, and even the DNFBP sector, which is designated non-financial businesses and profession sector. And then they issue their report saying that we have evaluated and we feel that, okay, UAE is on the right track, etc. So that mutual evaluation report came in February 2020. UAE has made significant progress across its MER recommended action to improve its systems on anti-money laundering and countering the financing of terrorism. They have established effective systems alongside it. So the latest news is that UAE is off the grey list right now. So it is in the clear. UAE will work to implement FATF action plan by demonstrating through case studies and statistics a sustained increase in outbound MLA requests to help facilitate request to help and facilitate investigations of the terrorism financing, money laundering, and high risk predicates. So these are what happens is there can be various controls that need to be seen. There's a full-fledged law on money laundering, and there are 40 recommendations actually that have been issued by FATF. Those recommendations have to be complied. So these points that are mentioned below, they are the recommendations that UAE is implementing gradually, identifying, maintaining a shared understanding of the money laundering and terrorism financing risks between different designated non-financial businesses and professions, DNFBPs. Actually, in 2021, March, I think, 4th March 2021, the UAE Ministry of Economy issued their decision and notifications on DNFBP sector regulation for money laundering. And since that time, there's a lot of traction on that side, showing an increase in the number and quality of STRs. STR means suspicious transaction report. Actually, I was on those webinars with my previous employer, and it was a public forum, so everybody heard. The thousands of people attended that. And the director the legal director of Dubai Economy said that you have to file suspicious transaction report. And as a matter of fact, those who are doing it, they don't even have to let the person know who's actually doing that fraud, money laundering activity, that we are aware, we can see the signs, allow that transaction to flow, and just simply confidentially and secretly report that transaction, STR. So those mechanisms are already in place. There's a portal called Go AML portal that UAE has, achieving a more granular understanding of the risk of abuse of legal persons where applicable legal arrangements, so we have to understand, like, the market players need an understanding of the different types of risks. Like somebody comes with a big bag full of money, and the dress is like, it looks like a very, assistant or operational level person. How can he have millions of dollars in a bag? So that's a suspicious situation, right? It has to be reported without informing that person that, look, we are aware, let the transaction flow. uh, Providing additional resources to the financial intelligence unit. This FIU is actually with the central bank. It is a part of the central bank, to strengthen its analysis function and enhance the use of financial intelligence to pursue high risk money laundering threats, such as proceeds of foreign predicate offenses. This term predicate offenses has been defined in the money laundering law. There are certain offenses that have been mentioned. It is referring to that. Trade-based money laundering and third-party laundering. You can create fake transactions of trading and through that channel funds to Dubai. Why? Because this is a relatively lower tax economy, right? So everybody from the world is trying to somehow channel money into UAE. Why? Because of the lower taxation and easygoing rules and regulations, demonstrating a sustained increase in effective investigations and precautions. So these are the things that the UAE is doing right now. So increasing the understanding, sharing information with FIU, demonstrating a sustained increase in investigations, proactively identifying and combating sanctions evasion. So there is a terminology called sanctions that is very frequently used in money laundering operations. So there are certain countries which have been sanctioned, like Iran or North Korea, or other, maybe even Afghanistan. So if you are doing a transaction sitting in UAE with these countries, this is a big red flag. These are sanctioned countries. But is it only countries that are sanctioned? No, there are individuals. So world has, I think, more than 180 databases. FBI has a database of most wanted. So many lists are. EU has their own list. UAE itself has its own list. So every country has a list of sanctioned individuals. Then there is something called PEPs. PEP means politically exposed persons. So UAE FATF action. So what kind of an action UAE is taken for financial action? Hold on a second. Let me read the Financial Actions Task Force. Yes, FATF. What actions? Some of the steps undertaken by the UAE to comply with its AML obligations include implementing a series of decrees and laws. So now we are going to start and quickly look. Federal Decree Law number 20 of 2018 established a committee dedicated to AML CFT objectives. So a committee was established through this law under the chairmanship of the governor of the Central Bank of UAE, which involves an independent FIU. Remember, I told you FIU is part of the central bank, to receive and investigate all reports submitted by financial institutions and other corporate establishment regarding the suspected illicit financial activity. That is the first one. Let us continue. Oh no, let's second one. Cabinet decision number 10 of 2019. Cabinet decision number 10 of 2019. So those who are listening to this session, please understand, sometimes cabinet decisions are issued which are subsidiary to a federal law. So there will always be a decree under which a cabinet decision, or supporting which or explaining which a cabinet decision may be issued. So this cabinet decision 10 of 2019 was subsidiary to the federal decree law number 20 of 2018, as amended later on by another federal law, raised the effectiveness of legal and institutional framework of the nation in the field of AML-CFT. This is all history, right? Historic. But you will see there's another major law that was issued later on. Cabinet decision number 74 of 2020. In 2020, another cabinet decision came, details the requirements related to terrorism lists and the implementation of UN Security Council resolutions on the suppression and combating of terrorism. So this decision was purely related to terrorism financing or terrorism supporting. Then fourth one, Cabinet Decision number 58 of 2020. Cabinet Decision 58 of 2020 introduced minimum obligations for registrars and legal persons in UAE. Registrar means corporate registrars, meaning, for example, Dubai Economy is one of the corporate registrar, or DIFC is a corporate registrar, and legal persons in the UAE, and aims to enhance the transparency of entities registered in the UAE. It also seeks to develop effective and sustainable executive and regulatory mechanisms and procedures. So just a quick recap: the Federal Decree Law number 20 of 2018 was the main law committed to AML-CFT objectives. Then there was a subsequent cabinet decision that was issued, which explained this law. Then another cabinet decision was issued in 2020 purely for terrorism financing and combating terrorism, and another cabinet decision that kind of put obligations on the registrars as well as legal persons in the UAE. So quite a lot of regulatory activity is actually performed here by the registrars who are free zones, for example, Rakes free zone or Shams free zone or DMCC. These have been regarded as supervising bodies in the AML-CFT law framework. Reporting suspicious transactions. Now we are talking a little bit about how to report the suspicious transactions. So UAE's Financial Intelligence Unit analyzes suspicious transactions and activities which potentially involve money laundering, terrorist financing, and related criminal activities. So FIU is the tough guy in UAE, let's put it that way. But FIU is purely for the financial sector. We need to remember. But even non-financial sector interacts with FIU. The analysis is done using data and reports from financial institutions and DNFBPs. So you're going to read this terminology quite a lot. You're going to hear this terminology quite a lot. DNFBP, which is designated non-financial businesses and professions, who collaborate and share knowledge to detect and act against such activities. So FIU kind of regulates that. The term, what is this? Who wrote this? Can you please remove this? The term money laundering concepts may refer to using or transferring tangible and intangible assets, movable and immovable properties. It includes national currency as well, foreign currency documents, notes, providing proof of ownership as well. The rights can be in any form. It can be electronic, it can be in digital form, etc. The licensed financial institutions or a designated non-financial business or profession suspects that a transaction attempted activity or funds constitutes in whole or part, regardless of the amount, the proceeds of a crime. See, if these organizations, a bank, insurance company, exchange house, or for that matter, a jeweler or a real estate broker or agent, which is a non-financial business, if they suspect that the money that is coming in, it relates to crime, it is proceeds of crime, relates to crime, or intended to be used in a crime, it must deliver a suspicious transaction report or a suspicious activity report or other report types of the financial intelligence units. So, and if they fail to report it and later on it is discovered or found that it was actually supporting a financial crime or it was proceeds of crime, those organizations, those bank or insurance company or jeweler or real estate broker, they will be fined actually. So now let us look at DNFBP. There are 5 categories of the designated non-financial businesses or professions. Real estate agents. Actually, if you look at the decisions, the full name is real estate brokers and agents. So we call them REBA in short. Then we have another category called DPMS, designated precious metals and stones. So here it is written as dealer of precious metals and stones. It's fine. It's still DPMS. Then company service providers, it is mentioned in the decision as corporate service providers, CSPs. Then auditors and accountants and law firms. These are the 5 categories of DNFBPs. It is an exam question, guys. Remember this, okay? It can come into an exam. So what are the 5 categories of DPMS? So DNFBPs must report transactions that they deem suspicious as they have reasonable grounds to suspect that the transaction might be related to money laundering or terrorism financing. Anti-money laundering software, something of a high demand in UAE. Software is being increasingly relied upon to generate alerts for suspicious transactions that immediately identify the doubtful transactions or accounts. Financial institutions, DNFBPs, both, they're regulated. These are heavily regulated entities. They need to rely on the alerts. So what does that software usually do? It does transaction monitoring, first of all. So it does screening. Like I go to an exchange house, I need to send some money to Pakistan. I will go to the exchange house. I will say that, okay, I need to send this money. The exchange house guy is going to tell me, do you have the Emirates ID? Please send. You can't even transfer money from UAE if you don't have Emirates ID. So anyways, he's going to take my Emirates ID. He's going to, check, write it in his software and hit the search button just to see if the person who's remitting the money, is he a sanctioned individual or a criminal? And he's also going to ask for the beneficiary. To whom am I sending money in India or Pakistan? And they will find out if the beneficiary is a sanctioned individual, any risk in sending this transaction. So this is how screening is done. That software usually is connected to hundreds of databases around the world, and they are quite fast. I've heard of softwares that can return in 3 seconds time maximum. If there is an individual who's in any list of criminal or politically exposed person, etc., within 3 seconds, 5 seconds, they will return the uh, search results. And if there's a problem, do you think that guy is going, the person sitting in the exchange house is going to tell me? No. As per guidance provided by the Dubai economy or financial intelligence units, they say stay silent, let the transaction happen and report it. Because then, if I am a bad person, if I was doing this crime, the financial intelligence unit is going to start playing the whole routine and they're going to find out. So anyways, financial institutions, DNFBPs, regulated entity need to rely on these alerts or red flags. They let the business know about the legitimacy of the accounts and money involved in the transactions. So generally, this is the reporting. A reporting entity in the UAE should be connected to the Go AML portal. I think I mentioned this name, right? This is the portal called Go AML, on which these regulated entities have to register. They have to have a Go AML account there, and their compliance officer will be always, they will have access to this Go AML portal. They will file their STRs or SARs on that portal. And this straightforward goes to the financial intelligence unit. A software system used to file in STR, and federal decree law number 20 of 2018 and article 20 clause 2 of the cabinet decision number 10 of 2019 make it obligatory for DNFBPs and licensed financial institutions to have procedures in place to report transactions. Even if you cannot remember the law references, at least you should remember the statutory obligations that have been highlighted. Okay, very interesting. Some penalties mention of some. Ministry of Economy may impose administrative penalties on DNFBPs for non-compliance with the AML. Non-reporting of suspicious transaction is also a criminal offense, and offenders are subject to heavy fines and imprisonment, including DNFBPs and employee failures to report a suspicious transaction, and it may attract a penalty of 100,000 dirhams or 1 million dirhams. So that's or imprisonment also. Minimum. This was an actual question asked in one of the exams. I think somebody is, yeah. Oops. Okay. Minimum penalty is how much? AED 100,000. Maximum is how much? 1 million. And there can be imprisonment also. This is an exam question. Exceptions. The UAE government has announced some exceptions to the law on suspicious transaction report due to professional secrecy requirements. I have spoken to people who were in financial intelligence unit of the Central Bank of UAE, and the level of confidentiality that these guys are exercising, one officer sitting in FIU does not know what the person sitting next to him is doing. That level of secrecy is there. Nobody knows. Only maybe the line manager would know. So uh, on the suspicion reports due to professional secrecy requirements for certain professionals such as notary publics, lawyers, independent legal auditors. So their job is very confidential. So information is very restricted. Who have obtained information while providing consulting services. These people are exempted from the law on STRs. They are exempted to file suspicious transaction report and are not required to report suspicious transaction. If the information is shared in good faith, the DNFBP's board members, employees, and authorized representatives are not liable for any administrative, civil, or criminal liability for reporting to FIU. Portal errors. To correct any portal technical queries, the FIU can be contacted through this email address, goaml@uaefiu.gov.au. While the correspondence related to STR, SAR, or any other file report, GoAML message board should be used. So, there is a message board on GoAML which can be used. The FIU can be contacted via fiu@uaefiu.gov.au. If there are even other queries, you can use the same uaefiu@uaefiu.gov.au. Any questions until now? Because now we are coming to the attractive topic of Federal Tax Authority. Any questions? Okay, so let us start with the Federal Taxation Authority. This is the primary body of taxation in UAE. The government entity responsible for administration, collection, and enforcement of federal taxes. It was established in 2016 by the President of UAE, by Federal Decree Law number 13 of 2016. So naturally, constituting a body like FTA requires a law. FTA supports three fundamental UAE national priorities. Exam question, guys. Pay attention to this. Three priorities. A commitment to continue making the UAE affordable for citizens and residents, enhancing the UAE as an attractive destination for international business and investors, and delivering a tax system that is efficient, easy to understand, and therefore straightforward for businesses to comply with. Well, I wouldn't say that it is very straightforward, but yes, compared to Pakistan, India, and even UK, US, the system is quite simpler, taxation system.
Yeah,
FTA,
certainly it is.
sorry, say again.
I said certainly it is, because over here it is very, very complex.
It is very complex. True, very true. The FTA is managed by a board of directors chaired by the minister. Okay, please remember, wherever there is minister written by capital M, that means the finance minister, the federal finance minister of UAE. Okay, and a sufficient number of members whose appointment and remuneration are determined by a cabinet decision based on the nomination by the minister. So minister nominates, cabinet approves for the compensation and appointment. FTA has a director general. His name is Mr. Khalid Al Bustani at the rank of an undersecretary who is appointed by the federal decree based on nomination from the chairman and the approval of the board. The FTA strategic objectives are development of an integrated and effective tax environment in accordance with the international best practices and system, which enables taxpayers to pay taxes, enables the authority to collect taxes and support the economic development process in the country. So these are the strategic objectives. Development of the system, collection of taxes, achieving the highest levels of tax compliance and promoting self-compliance. Naturally, around the world nowadays, it is self-assessment regime that is in practice, right? Among taxpayers by developing tax compliance, returns, audits, and enforcement systems, dealing with cases of non-compliance, developing and implementing. So all of this paragraph in one word, compliance, tax compliance. Ensuring the delivery of administrative services based on quality, efficiency, and transparency standards by developing and implementing supporting tasks. So administrative support. If I have to summarize the whole paragraph, FTA is supposed to provide us a lot of administrative support. Questionable, there are reservations, but initial level, sometimes people don't get that kind of a very strong answer. But if you insist, if you say that no, I require, FTA is very proactive. So is ZATCA. And a senior official usually afterwards calls you and explains and answers your question. Both entities, FTA as well as ZATCA, in this matter are supportive, but at a second tier. So then enhancing the culture of innovation and creativity in the organization by developing and implementing programs that encourage stakeholders to innovate in services. So a lot of innovation is there, culture of innovation and creativity in the organization by developing and implementing programs. So these authorities, even I am aware of National Bureau of Revenue, NBR in Bahrain. So intelligent systems are being deployed who can identify red flags. If some anomaly is apparent, the organization is reporting revenue of let's say 100%, but if we benchmark it with the number of employees, doesn't make sense. So those kind of red flags can be raised. So that was quick introduction about the Federal Tax Authority. We saw the functions, but I think again it is coming in, so we can look at it. So FTA attends to the implementation of laws and regulations by implementing applicable laws and regulations related to federal taxes and relevant penalties as well, paying the FTA's financial obligations, implementing double taxation treaties ratified by the state, which avoid double taxation, and combat tax evasion. This is one. It also provides legislation related to the administration, collection, and enforcement of federal taxes and relevant penalties. Collection of data. FTA's responsibility to collect statistical data and information related to federal taxes and relevant penalties, create records for the registered taxpayer, and so all information management related to taxpayers and various market participants. Coordination between governments. FTA also coordinates with the federal government and the Emirates governments and taxpayers on all matters related to federal taxes and penalties. It also requires to exchange information and expertise with other states and international organizations. So there is an information exchange. Usually we call it, what do we call it, Haya? Tax Information Exchange Agreements, TIAs?
Yes.
Yeah, so FTA manages TIAs as well, Tax Information Exchange Agreements. It also represents the state. Whenever there is a word states with the capital S, we will always remember that we are referring to UAE. So now coming to the compliance bit. On the compliance front, the FTA inspects taxpayers' records and documents, reviews their tax returns, reports submitted to FTA, audits them, decides on approving or amending certain returns, or requesting any additional information or documents. implements a mechanism to settle disputes between taxpayers, FTA and the FTA in accordance with the laws enforced. Its powers in relation to information gathering are to demand access to information or data available with any third party who manages this information. Now, generally speaking, these were the functions of FTA. UAE does not levy income tax, meaning on individuals there is no income tax, but the Emirate levies a corporate tax on oil companies and foreign banks. Two sectors are usually dealt with at Emirate level. So, anyways, corporation tax levied from 1 July 2020. Hold on a second. Value-added tax is levied on a majority of goods and services. Corporation tax will be levied from. Is this correct, guys?
No, this is not correct.
This is not. It's a typo error in the portal. It is 1 June 2023. Okay. So let us continue. So 3 minutes are left. We are quickly reaching. Let us go through the concept of tax agents as well. In Pakistan, we have something called ITPs, right? Income tax practitioners. The role of tax agent is to help businesses to be compliant with their tax obligations. Taxpayer is allowed to appoint another person as its tax agent to act in their name. So there's an agent principal relationship, and on their behalf with regards to their tax affairs. Agent, sorry, apologies, guys. So the agent assists the person in fulfilling the tax obligation and exercise of the associated tax right. So you can become a tax agent through meeting certain requirements. We are going to see those in details. I think what we will do is, because we're left with only 2 minutes, I will go through this, but there will be a little bit more discussion on it. Tax agent may refuse to act on any matter or plan which may result in breach of any law. So because tax agent has a lot of liability as well. Those wishing to act in the role must satisfy each of the following conditions before applying to be registered. Hold an accredited qualification from a recognized university or institution showing specialization and practical experience. A certified bachelor's or master's degree in tax, accounting, or law from a recognized institution, or a bachelor's degree in any field plus a tax certification from an internationally known tax institution. Have at least 3 years relevant experience, have the ability to communicate orally and in writing in both Arabic and English, have passed any tests to meet qualification standards as these may have been specified by the FTA. There are standards and qualification requirements that be able to provide good conduct and have never been convicted of a crime or misdemeanor prejudicial to honor or honesty. So no criminal record. Be medically fit to perform as tax agent. Hold professional indemnity. There's an indemnity insurance that the tax agent has to take. So generally speaking, this is FTA may delist the tax agents that are non-compliant. And later on, if they comply, they can be restored as well. Guys, I will return back in another minute or so. So join back, okay? We are almost, tax agent we have done. And luckily, it seems that we completed it. We are about to launch the knowledge check. Okay, guys, ready? So what I'm going to do is I'm going to start the quiz now, and we are going to kind of revert back to what we learned today. Okay. So first question, which of the following are Emirates in the UAE?
Abu Dhabi, Ajman,
Mhm.
Dubai,
Okay.
Fujairah,
Okay.
Ras Al Khaimah,
Ras Al Khaimah,
Sharjah,
Sharjah,
Al Queen.
Quwain. What about Al Ain and Masdar
This
city?
is city of Abu Dhabi, Alan.
Correct. Al Ain is only a city in the Abu Dhabi Emirate. And what about Masdar city?
This is also city.
Yeah, this is only just a geographical
Free zone.
location in Abu Dhabi. Masdar is a part of Abu Dhabi. So, right. So I'm going to simply, oops, I think there is more participant. Here it is. I'll simply admit the participant. Okay. So let me submit the answer.
Correct.
Correct. Moving to the next question. Select the correct answer to complete the following statement. The UAE was formed on 2 December
1971.
1971.
1971. Okay, let's see. So I don't know. I will just select your choice. So you guys have to be careful in answering. Okay. Correct. Very good. Let's go to the next one. Select all that apply. Which of the following authorities are mandated by the UAE Constitution? So Federal Supreme Council, the Federal National Council, Federal Judiciary, the Cabinet, the Office of the President, and the Prime Minister. Answers?
Cabinet.
Federal,
Sorry? Cabinet.
Federal Supreme Court, Cabinet,
Okay. Federal Supreme Court, Federal Cabinet, not Federal National Council.
Council also.
So there were two councils, right? Can somebody remember this point? You remember how the law was approved?
Supreme Council and the National, I think.
Sorry?
Supreme Council and the National Council.
Yeah, so first the Federal National Council ratifies the law and then presents it, right? And
Yeah.
the president also looks at it, and together with the Federal Supreme Council, that law is approved. So
Yeah.
the council is also mandated by the Constitution. So Supreme Council, National Council, Cabinet, we all know. What about Federal Judiciary and the President and Prime Minister's office? Like Constitution will
I think the Office of President and Prime Minister is also included because with their approval it is passed.
Yeah, and what is Constitution of any country? Don't you think any
Yeah, the President and the Prime Minister do. Yes.
Yeah, exactly. What about Judiciary?
It would also be included because it is Federal Judiciary for every.
Okay, so meaning all of the answers. So let's submit.
Basically, judiciary is not the.
You were saying? Judiciary is mandated by UAE Constitution, guys. The judiciary is mandated by UAE Constitution. Okay.
Yes.
Fourth question. True or false? A decree does not have the force of.
False.
False.
Correct. Decree has the force of law provided its terms are not inconsistent with the Constitution. So yes, and the decree has to be ratified. Select all that apply. Which of the following influenced the Emirati legal system? Remember this point? Earlier I told you.
Egyptian law, Roman, and Sharia.
Sharia law, French law,
French law, and
Egyptian.
Egyptian law, and Roman law.
Roman law, yeah.
Okay.
no Egyptian law.
No Egyptian law.
No, Egyptian law was there.
It was there.
It was there.
Yes. So please see this carefully. English law was not selected. UAE law is not influenced by the English common law. My question, where is the English common law applied here in UAE?
Free zones?
Free zones. Which free zones?
DIFC?
AFC, and there was one other.
ADGM.
ADGM. Yes, correct. Two financial free zones of UAE are famous in the world. What are the names of those two free zones? One was DIFC. What was the other one? ADGM. ADGM. Abu Dhabi Global Market. ADGM.
Yes.
Okay.
ADGM.
But are these the only two free zones that apply English common law? You remember 2016? What happened in 2016?
No.
Ras Al Khaimah. In 2016, Ras Al Khaimah collaborated with DIFC to provide an opt-in option. Remember? So you will.
I have no idea about that.
Yeah. So that in 2016 this happened. Anyways, let's go to the next question. Which of the following is a geographically demarcated area within the UAE in which 100% foreign ownership is permitted?
Free zone.
Free zone, jurisdiction, dependency.
Free zones.
I think that was an easy question, right?
Yes.
Okay. Next. True or false? Trade licenses are issued by the respective Emirate regulators. Is this true or false?
True.
Yes. I think we all read this. It is true. Okay, let's go to the next one. Select the correct answer to complete the statement. Failure to report a suspicious transaction will attract a penalty of AED 10,000 with 2 months imprisonment per transaction.
Third option, minimum of
100,000
and 1 million maximum.
You guys remember?
For
You guys remember?
Yeah.
Very good. Okay. Next, question number 9. True or false? The Federal Taxation Authority, FTA, has jurisdiction over the administration, collection, and enforcement of federal taxes and relevant. They do not distribute the revenue. They do not distribute the revenue. True?
False.
True.
false.
Who said false?
I said. Before I said true. Because here it is written they do not distribute the revenues.
So you're saying they do distribute the revenue?
No.
No, it's true. It's true.
Okay.
Not true.
So no, there's one other lady, Kalima or someone who said false.
Sir, I also thought about the same distribute the revenues.
So what is your view, Kalima?
No, I understood it different way. I thought that they do not I thought they're distributing the revenues.
So what should I click? True.
True.
Okay, I will go with your answer. With your answer.
Incorrect. See, false.
Okay, understood, guys? FTA also distributes revenue. Tax collection revenue, they distribute to various government authorities and all. You guys should, download the law of FTA. I knew the answer, but on purpose, I selected this so that you guys will remember. Okay, next. Last one. Okay, select the correct answer to complete the following statements. Candidates must
3
demonstrate
years. Years.
how many
5 years.
3 years. 3
of
years.
5 years.
experience as a tax
5
professional?
years?
3 years or 5 years
5 years.
to become a tax agent, right? Who says, okay, what is the majority answer? Is it 3 years or 5 years?
3.
5.
5.
5.
5.
5
5
years.
years.
Okay.
5.
Haya, I'm with you, but we'll go with 5 years answer. Okay.
No.
Incorrect.
Yes, it was 3 years. I also said that.
So the answer is 3 years,
3.
guys. It's not 5 years. For 5 years is for auditors. It was very
Yes.
clearly written. It was very clearly written for tax professional who want to become a tax agent. The required experience is 3 years. Got it?
Yes.
So not bad. I mean,
80.
80%. That's it. So let us summarize this. So after completion of this module, now we are able to at least describe the Emirati legal and court system. We are able to identify different types of companies and licenses defined under Emirati law. We are able to explain anti-money laundering and anti-bribery legislation. We are able to define the functions and purposes of the Federal Tax Authority. So that's it. Congratulations, guys. You have completed this first module and with 80% success, which is good. I think that's about it. So this is the completion of module 1. Great. Thank you very much for joining us, joining the call. Are there any questions that you guys would like to ask?
Yes, I have a question. During money laundering, there was exception for few people. Is that exception means like, are they shadowing the phenomena of whistleblowers?
No. The exceptions for STRs, filing of suspicious transaction report, those exceptions were created for those entities which have confidential information and have a bona fide relationship, like a lawyer, like an auditor, to whom you share in certain information, right? So for that, for this purpose, they were exempted. Like client, take the example of lawyer, client privilege. Remember this? You know this? That
Yes.
people can go to a lawyer and tell them about whatever dark secrets that they have, and lawyers must not divulge this information, right? It's a privilege allowed under law. That is why they are exempted, right? So anyways, great. It was hold on, let me see where yeah, oh, okay. I think I'll have to go on top. So this course is 100% completed. And okay. So guys, this is how you do this uh, training. So we completed the first module. There are how many modules? Let us quickly have a look at it. So, and then there is part B also. So under part B, again there are, so we what we are looking at is 14 modules. So and we have how many weeks? We have only 8 Saturdays. We'll have to be quite speedy in I'll see how we can speed things up. We still have some time. Do you want to take a break or shall we go into the second module?
We can go into the second module and start it.
Okay, so fine. Second module, business entities. Right. So the overview is here. After completing this module, we should be able to identify features of companies law for mainland companies and free zones. We should be able to define economic substance required for each entity to avoid breach of the compliance aspects. We should be able to describe UAE publicly available company registers and entities with which they share information within the UAE. We should be able to understand beneficial ownership in relationship to the company. So, an introduction to business entities. Basic company law should be understood by auditors because generally it is a company or an entity organized under the company law. So there are three types of business entities: mainland, free zone, and foreign companies. Let's see these.
Altaf.
Yeah.
Yeah, Altaf, sorry. Means I have a question from the previous section.
Yes.
Like I have, the question was related to the exemptions given to the auditors and the law firms.
Mm-hmm.
You mentioned that initially my question is, they were included in the list before. Means there was five specific person list that who are supposed to basically provide the information to FIUs. Auditors and law firms were there. Now they were specifically exempted at a later stage. So what was the purpose? They were included at the first stage and then excluded in the exemptions list.
So there was a lot of hue and cry raised that if confidant who's dealing with a beneficiary who has come to that beneficiary and remaining within the law, other laws are getting conflicted, then this was a removal of conflict. You understand my point? I just gave an example of the lawyer, right? So this is a great example to understand. In all over the world, the concept of client privilege is dominant, right? So any client who has committed a crime can go to a lawyer and actually tell him about the whole crime, and the lawyer is bound by the law not to divulge that information. Why? Because the person has become the client. And it is the responsibility of the client to defend him and minimize the penalty if at all applicable. That is why they cannot divulge. For that matter, similar, okay, to not to that extent, but to some extent, same kind of a confidential information applies to an auditor as well. Imagine a situation where a company is in a very sensitive situation. If they disclose that these debts we are making a provision for, these can actually be recovered through an alternative strategy, and they divulge that information, make it public, what will happen? The entity will likely lose the probable benefit of actually collecting those debts. That is why, these professions are of a slightly different nature. That is why they were allowed this exemption. I hope I was able to answer your question.
Yeah, no, that's fine.
Okay. Or if anybody has any other perspective to share, open to that. Okay, anyways. So coming to the topic under review, mainland companies. Mainland companies, oops, I think my battery is gone low. Can you please check? No, change the slots. Okay, great, perfect. Mainland company is a company registered at one of the UAE DEDs, Department of Economic Development. Why did they use the word one of the UAE DEDs? Can somebody answer that? Nobody can.
Must be what?
Emirate.
Emirate level. Yes, that's the right answer. Good. 7 Emirates are there. Each Emirate has a Department of Economic Development. So that is why one of the UAE DEDs. This means that if business is conducted in the UAE mainland, a business entity to be registered with the relevant Emirates DED, which will then provide a business license for that entity to start business. Mainland company is also called an onshore company. It is permitted to business in the local markets as well as outside the UAE without restrictions. What about free zone companies? I think we know that. Quite a lot of us know that. A free zone company is a company formed within a special jurisdiction regulated by a particular emirate. As of the date of writing, 45 free zones have been established and function in the UAE. Free zone jurisdictions have their own regulations and have a government regulatory body called the Free Zone Authority. Okay. In the money law, anti-money laundering law, these are referred to as supervising bodies. So, foreign companies, a foreign company may apply to the registrar for registration as a recognized company in such manner as shall be prescribed in the regulation. The legal framework, so those companies who are not really present in UAE, they can still get a registration of presence here through a branch structure or otherwise. The legal framework is set out by UAE company law, individual free zone company law, provisions in the Dubai International Financial Center, provisions in the Abu Dhabi Global Market Companies Law. There are different legal forms that the companies can take under the DED, depending on the type of business and economic activity. Legal forms must be consistent with the economic activity. The requirements of each economic activity are available. Let us look at it. So, for example, information is available from the following resources in the folder titled Essential Resources. I'll at the end of the session, I will share these resources which are downloadable and provided here. Okay, guys. Abu Dhabi Chamber is there. Dubai Economy, Start Your Business. These are different published resources, procedures and requirements, issuance or economic licenses. So, for Ras Al Khaimah, issuance of license. So these various resources are provided. You don't really have to go into depth of these resources, but at least get an idea. That's it. Let's talk about free zones. Free zone company is a company formed within a special jurisdiction regulated by a particular emirate. As of the date of writing, 45 zones have been established. Let us look at various zones. Abu Dhabi Airport Free Zone. So this airport free zone is available in Dubai also. Abu Dhabi Global Market, ADPC, Khalifa Port and Industrial Zone, KPIC, Industrial City of Abu Dhabi, Higher Corporation for Specialized Economic Zones. So Masdar City. You remember last quiz, Masdar City. So it is a free zone also. 2424 is very famous for freelancers and technology companies. In Dubai, the largest number of free zones is there. So IFZA is there. We have Dubai Tech. We have Ducams, Dubai Cars and Automotive. Dubai Design District, Flower District. So all of these, names of the free zones in Dubai are there. The most famous free zone of Sharjah, who can tell me? Hamria free zone is very famous, but Shams is like really growing ahead. But Sharjah Airport free zone is there. There's another free zone called Safe. Where is it? It should be here. But anyways, Safe zone, Sharjah Airport free zone is there. Very famous zone, designated zone. So Ajman also has Ras Al Khaimah. So no need for opening these tabs, but okay, let me just click them so that maybe okay. So a lot of various free zones are there. Some are still under construction. Dubai Maritime City, Carpet Free Zone, Dubai Auto Parts City, etc. Heavy equipment. Let us come to the UAE company law. Federal Law number 2 of 2015. This I have repeatedly said. It is one of the most important laws that we must refer to and remember. So 2015, year 2015 is the year that we should remember, and law number is 2. Relating to the formation of companies, etc. Let us look at the key bullet points here. UAE company law establishes rules. The company law generally does not apply to various companies which are excluded from company law by resolution of the UAE cabinet. So it is only UAE cabinet that can exclude a company being subjected to the UAE company law. Wholly owned by federal or local government. That's a key point, examinable question. Wholly owned by federal or local government. Some companies may be wholly owned by governments. They will not be subject to the company law, or any other companies owned by such by such companies. If a special provision to this effect was included in the company's memorandum of association. Operating in certain oil, gas, and power sectors in which the federal or local government directly or indirectly holds 25% of the equity. Providing a provision to this effect had been included in the company's memorandum of association, Article 4. The company law does not apply to free zone established companies. Company law does not apply to free zone established companies to the extent of a conflict. Providing a special provision to do so was included in the applicable free zone law and regulations. If you see, every free zone is established by a decree, Emirati decree or Emirate decree, sorry. And in that decree, if it was clearly highlighted that the company law will not apply and it was endorsed by the federal government, then companies in that free zone will not be subjected to UAE commercial law. However, there is an exception, except for free zone companies conducting business activities in the mainland under rules and regulations approved by the free zone. So some free zone companies, see, a long time back when I even came to UAE in 2007, it was seen as a big gray area. Can a free zone company operate in mainland? That was a big question being asked for almost 10 years. And then later on, recently, all the doubts were completely thrashed away when the UAE corporate tax decree law came. Why? Because the decree law acknowledged the already, elephant in the room, that, guys, come on, what are we even talking about? Free zone companies are already doing business in mainland. That is why the qualifying free zone regime that came into play, they addressed it properly. That if the free zone company makes a supply to mainland customers, what will happen? So now everybody is clear that free zone companies are they are doing transactions with the mainland customers. They're selling. It's a normal course of business. But for that business which is done with mainland, the law will apply. The company's law will apply to that extent. Where subject to a cabinet decision determining the entry and registration conditions under which the free zone company is permitted to conduct activities in the UAE land. So there will be a set of regulations under which will be applicable, and the cabinet will decide that. So this is the framework basically for the free zones companies to operate in the mainland. Any questions until now?
No.
Okay. Coming to the companies, there are 4 articles that define companies and requirements for their formation. What is a company? Article 8. Under the company law, a company results when a contract is entered into between 2 or more persons who are obliged to contribute to an economic project which intends to make a profit. So key point here, profit. Each of whom provide a share of money or work, and each of whom is entitled to profits or losses earned or sustained by that project. An economic project for this purpose includes any commercial, financial, industrial, agricultural, real estate, etc., etc., etc. So this is Article 8, Clause 2. Company may be incorporated and fully owned by one person as well. In Pakistan, we call it single member company, right?
Yes.
What do we call it in India? I think same thing.
OPC, one person company.
One person company. Okay. Company name, Article 12. The company law provides that each company must have a commercial name which may not violate the public order of the UAE, and the name is to be followed by the legal form of the company. A company cannot be registered in a name previously registered or in a similar name in order to avoid confusion. So naturally, I think you guys are already aware, whenever you are registering company in your own respective countries, also there is a process followed for approval of the name. Company address, Article 13, common article. Each company formed must have a registered address. Then memorandum of association, Article 15, company must have a memorandum of association. Similar, which is to be in Arabic, which has been approved by the notary, and which must be filed with the relevant regulator. And common clauses will apply. MOA is the mandatory document for the company formation in UAE, and it contains the details of the shareholders, board members, regulations regarding the operation of the company, policies, safety, and security aspects. MOA must be submitted along with other documents. There is always an object clause in the MOA. There are certain rare situations sometimes where instead of the name MOA, I have seen actually here that instead of the name MOA, it is written as Articles of Association, but actually it is an MOA. So that is also quite possible here. Okay. Although we know that Articles of Association is different from Memorandum of Association, but there can be exceptional situation in UAE. So legal capacity. We are coming to Article 9 of the company law that covers company forms. The company law does provide for the incorporation of a range of business entities, which is Article 9, Clause 1, namely limited liability company, PJSCs, a private joint stock company, general partnership, limited partnership. In order to ensure that the module is manageable, our comments are confined to a company. We're not going into LLPs or general partnerships or other things. Any company not incorporated in one of these forms is invalid. And consequently, any person contracting with others in the name of the so-called company is or are jointly and severally responsible for any liabilities created under the contract, and the company will not be liable. So, what is that law? The estoppel. Who can tell me what is estoppel? Haya or any other person? Law of estoppel, you don't know? Holding out. Okay, if you don't know, just do some research. Sometimes actions are taken on behalf of the.
From their words.
No, it's not. Just research law of estoppel. Okay, so you cannot act on behalf of another company without ratification. Any company incorporated in UAE is a UAE national company. But okay, so when you register a company in UAE, it is said to be domiciled in UAE. But that company does not necessarily enjoy the rights of UAE citizenship, making a company a national assists when determining whether the company is a resident of the UAE under a bilateral double taxation agreement. So tax professionals on this call would immediately know that there is a concept of place of effective management, right? So if your company is located in UAE, but all the management is being done from another country, then actually the place of effective management is that country. So if you want that company to be really seen as a citizen of UAE, although the word citizen is for individuals, but domiciled in UAE, then the affairs of the company must be also managed from UAE. Once incorporated, the business entity is a legal existing entity, which means it can sue and be sued in its own name. So what we just read was something that you guys, quite a lot of you, have already studied in your professional qualifications. So any questions until now? If you have any question to ask, I can answer.
Not yet.
Okay. So some provisions, for example, related to capital. The company's capital consists of cash provided by the shareholder or partner for the shares and or in-kind property contributed for the shares. That in-kind property must be valued. An active partner's share of the entity's capital may not be his work, nor it be his reputation or his influence. So that's a very interesting question. Somebody says, I have a lot of reputation, so that's my capital. It is not accepted under the company law. Distribution of profit and losses. Article 29 of the company law. So if a partner's proportionate entitlement in the company's profits and losses is not listed in the MOA, then the share shall be calculated by applying the person's percentage in the company's capital to the profits and losses. So pro rata basis. If the company's memorandum association provides for a profit share but not a loss share, then the partner's share in loss is to be calculated by applying same rule, pro rata. How much amount of capital was contributed? If a partner's share in the company is limited to his work, then his share in the profit and losses must be described in the MOA. So guys, I'm going to revert back, closing this and coming to the same window. It is not complete yet.